One of the reasons the rich get richer, the poor get poorer, and the middle class struggles in debt is because the subject of money is taught at home, not in school. Robert Kiyosaki. Money, money, money. Hello, welcome to Dragon Financial. I'm your host, Brad. Have you ever wished for more money? Or maybe just to understand finance? Here at Dragon Financial, we do things a little bit differently. Every episode will take us on a planned series of learning more about money. This is a journey that will take us through the history of money and teach you what you should have learned in high school. Our team has prepared a multi-part series to teach you the basics of money and finance. So if you want to master money and finance, subscribe to the Dragon below to take this journey with me. After we've learned the basics of money, we'll dive into the stock market, and we have several more series coming your way. We can't promise to take you from zero to hero, but we'll try our best. So let's dive in. Today we'll be learning about banks. JP Morgan Chase, Bank of America, Wells Fargo, or Citigroup. Have you seen one of these names before? Odds are you probably have. These are the big four U.S. banks and account for trillions of dollars of U.S. money. But why do we need banks? Or better yet, why would I want a bank account? Any good bank will allow us to protect, store, and transfer our money. Many banks will offer bonuses for setting up direct deposits. Direct deposit is when your paycheck goes directly into your bank account. I have included a link in the description to my favorite website to find these bonuses on NerdWallet. But before we go sign up for a bank account, there are a couple things we need to know. The two most common bank accounts are savings and checking accounts. First, let's look at the checking account. This account is designed to give you easy and frequent access to your money. It lets you pay your bills with checks if you're old-fashioned, online with bill pay, or by ACH payments. Bill pay is an online service offered by most banks that lets you pay your rent, utilities, credit cards, or anyone else you need to pay, and it's usually free. ACH payments are when your bank transfers the money directly from your account to another party, usually another bank. Checking accounts also allow you to access money through ATM, or automated teller machines, with a debit card, which we will talk about next in our chapter on debit and credit cards. Our next account is the savings account. This is a perfect account for saving your money because it pays more interest. Interest is a small amount of money a bank pays for keeping money in your account. Savings accounts are designed to keep the money a little bit longer than a checking account, and therefore usually have transaction limits on how often you can access your money per month. They are a risk-free place to have your emergency fund, and the reason they are risk-free is because of the FDIC Insurance. The FDIC Insurance is the Federal Deposit Insurance Corporation and will act as insurance at a member bank for up to $250,000 US in either your checking or savings account. This insurance is actually paid by the banks and not by the customers directly. The FDIC is well respected and will even pay you directly if your bank collapses, such as happened in the 2008 banking crisis. If you like money, hit the like button. A couple other things you need to know are routing and account numbers. You use these numbers to write checks, set up a direct deposit, and make ACH payments. The routing number is specific to your bank and tells you where to send the money. The account number is specific to you and tells the bank where to get the money from or send it to. And they get it from your account or send it to your account depending on the type of transaction. With all these great services, you may be wondering if banks have any negative aspects, and the answer is yes! Fees! Many banks charge fees, so it is important to understand your account and any common fees that your bank may charge. Some banks charge a monthly maintenance fee just for keeping your account open. This fee can be commonly avoided by keeping a certain amount of money in the account, also called a minimum balance, or by setting up a direct deposit from your work. Banks also charge fees to access their ATM machines. These fees can usually be avoided by using your bank's ATM network. If you need to use an ATM outside of your bank, Be aware that you may be charged a fee by your bank and the owner of the ATM. So you would have to pay double fees on that transaction. Another common fee is an excessive withdrawal fee, usually on savings accounts, that limit the number of times you can access your account in a month. You can avoid this fee by limiting your transactions or planning ahead for the month and taking out everything you need for the month at once. The final fee to discuss is an overdraft fee, where you take out more money than you have in your account. One can avoid this fee by not using checks, because they can often take several days before they are withdrawn from your account, and it is easy to lose track of how much money you actually have in the account. You can also check your balance instantly on your smartphone with the bank's app. If you like money, hit the like button. This app will also allow you to quickly find in-network ATMs. Next, you can link your bank account to services like Venmo or Zelle, which will allow you to quickly, easily, and most importantly, securely transfer money to your friends and other businesses instantly. I commonly use Venmo when splitting a check with friends at a restaurant. So which bank do I use? Well, personally, I use Charles Schwab. They are a great bank for travelers with a worldwide ATM network. So no matter where you are in the world, you can access your money. They have free checking accounts and savings accounts. They have excellent customer service. And if you're interested in the stock market, you can link your bank account to a brokerage account, allowing you to buy and sell stocks. But with any bank, it is important to understand your account and any fees they might charge. Here's a quick review of the topics we learned today. The Big Four banks, checking accounts, automated teller machines, savings accounts, interest, FDIC insurance, routing and account numbers, bank fees, Venmo, and Zelle. I will leave timestamps in the description below so you can quickly review any of these topics. Remember, this is not financial advice, and I am not a licensed financial advisor. These are my personal thoughts and opinions. Also, I am not being sponsored or an affiliate for NerdWallet, but I have included affiliate links to Charles Schwab and Venmo in the description below so that you get more money when joining. I hope you enjoyed our journey today as we explored banks. Join me next time as we focus on debit and credit cards in our series on money, what they didn't teach you in high school.